Well, let's take a look at what's coming up this week. On Tuesday, the US is scheduled to release inflation numbers for November. The cost of living showed signs of easing in October. However, data in the past months show Americans are still spending and inflation remains well above the central bank's 2% target. The next day, the Federal Reserve holds its two-day meeting, its last one for the year. The US Central Bank has raised interest rates 11 times since early 2022 as it tries to curb inflation. Rounding the week off is a slew of economic data out of China. They include industrial production numbers, house prices, and unemployment data, all for the month of November. Well, for more on all of these figures, let's bring in Jamil Ahmed. He's the chief analyst at GTC, an online trading brokerage firm. Jamil, great to have you on the show. What are you looking at this week, and what are you expecting from this data?
So, Jenna, it's going to be a data-packed week, and we have to remember that already November and December have been anything but seasonal low for financial markets. I'm starting with the US inflation data. We've had a little bit of a roller coaster over the past couple of months because we did see inflation ease all the way to 3% as early as June 2023, which is a significant decline from the highs of 9% just 1 year earlier. But since then, it's gone a little bit up and a little bit down, and now we're starting to go back towards that 3% level. And that's what we're expecting from this data this week. But the main event is very much going to be the Federal Reserve, which is the US Central Bank interest rate decision. And that's because we've had this tug of war between the European Central Bank and the US Federal Reserve expectations for who was going to cut interest rates first in 2024. That's why we've had a real shift in financial markets dynamics over the past couple of weeks. Now, looking at the Fed, there was a distinct possibility just last month in November that the Fed might move in December. That's been completely evaporated. What we need from the Fed is some guidance on whether they will ease policy over 2024 and whether it could be any time before the summer months.
What are you most concerned about at this time of year? Is it the US interest rates or is it China's slowdown?
Actually, it's global central bank policy because we've had such a significant shift in momentum over the past couple of weeks. I'll just give you a few examples here. November was the best month for global financial markets in terms of stocks and indices for 3 years, based on the expectations that it would be the Fed, the US Central Bank, that would lead the pack to cut interest rates first. That's because after the GDP for the third quarter of 2023 came out annualized 5%, which was a relentless growth, we've had a lot of concerning pessimistic signs from some of the Federal Reserve spokespeople that suggest the US economy is going to slow down. We haven't seen that in the data, but we've had a jack-in-the-box moment because the European Central Bank has seen its EU inflation data, the most recent reading, come in towards as low as 2.5, 2.6%, which is very close to the central bank target. That's why the market is shifting momentum back towards selling the euros rather than the dollar. And now we are thinking that maybe we might have a left field move here, and it's going to be the European Central Bank that will cut interest rates first with the global central bank narrative next year, which is why we are seeing such a shift in dynamics.
Yeah, I mean, inflation hasn't been that big a problem here in Asia, but those interest rates are still biting. What do you expect from the smaller economies in Asia going into 2024?
Yeah, we are hoping to see some improved economic momentum, significantly because we have seen some of the pullback in the US dollar strength. We have to remember now that we have global inflationary pressures because of the cost of living increase in exports, imports, and so forth. But that also has not been helped by what has been a relentlessly strong greenback throughout 2023, which has really bucked expectations. So should we see actually some signs of inflation easing globally, specifically in the developed central banks, that will carry through and pass into emerging economies. And we do need to see some more improved economic momentum from China, because we can't forget that when it comes to the Asian region specifically, China is so important. Everybody relies on Chinese economic demand anyway, globally, but specifically in the Asian region, that matters more as well.
Jamil Ahmed, Chief Analyst at GTC Global Trade Capital, many thanks for your time.